Hello and welcome to Business Incorporated live on Channels Television. Well, this trading week is winding down. Hope it's been profitable for you so far. But here's what's coming up in the next 55 minutes. As the Naira hits a low last seen in March, we'll drill down on drivers and what to expect for the Naira in the second half of 2024. And Egypt has lowered its wheat self-sufficiency targets for the current fiscal year, despite plans to increase agricultural land area. Uganda's central bank starts buying locally produced gold to support forex reserves. Ladi Williams. Let's get a check on the commodity markets now, starting with gold prices. We see that's climbed again for a third straight trading day now, $2,389, up 0.39%. That's what we have for the safe haven metal. Spot silver, that's at $31.31 per ounce. Up a big 0.97%. So this is the most shiny metal right there in the trade. And we see palladium still going lower, below that $1,000 mark, $988 a pound, down 0.31%. Let's get a check on oil prices. You know, the oil prices edge higher in the early trade, but we're still seeing elevated movement there. With Brent, $85.43 a barrel, 0.4% up, almost 0.5%. While WTI, that's a U.S. grade, still managing to hold above that $80 mark, $82.47, up 0.5%. Let's look at other stories now. We see the Corporate Affairs Commission said it would cancel the certificates of incorporation of BDCs whose licenses have been revoked by the Central Bank of Nigeria. Aligned with the directive by the CBN, the CAC in a notice on its website said the certificates would be cancelled within 3 months if the affected companies do not change the names and objects of such companies. And shareholders of Access Holdings PLC have expressed confidence in the company's growth strategy and pledged their support as the group begins to raise 351 billion Naira via rights issue from existing shareholders on the Nigerian Exchange Limited. Access Holdings rights issues offering 17.77 million ordinary shares at 50 kobo each at 19 Naira 75 kobo per share. Take a listen.
To existing shareholders.
The management and board of Access Holdings PLC are seated here with the group's shareholders, stockbrokers, and investors at the Nigerian Exchange Building in Lagos. The group is undertaking a capital raising initiative of 351 billion Naira through a rights issue to existing shareholders. Under this rights issue, 17.772 billion ordinary shares will be offered at 19 Naira 75 kobo per share.
Share what today has evolved to be the corporate philosophy.
In his presentation, the bank's managing director, Roosevelt Ogbonna, says the bank has the track record and now seeking to become the world's first truly African global bank.
We are the largest lender in the market, largest deposit taker. And I think the conversation would have been a bit narrow if it was just in Nigeria. Across the 14 markets we operate in the continent, we're top 5 in 10 of them. In the other 4 or 5, ex-South Africa, by 2027 will be a top 5 bank. So in some sense, we're not local champions. We're the 3rd largest bank in Zambia. Fact.
And the next phase of the bank's growth trajectory is captured in these key metrics. The bank hopes to scale up the total number of its customers to 125 million and increase the total number of its monthly active platform users to 42 million. The group's chairman tells the story behind the numbers.
If I was given the opportunity to theme our capital market raising exercises, you know what I'll call it? I'll call them promises kept. Herbert in 2018 announced that in 5 years' time, it will be top 1. And by 2022, so it was. Promises kept.
The shareholders also have words of confidence to back the exercise.
I have confidence This right issue of 19 Naira 75 kobo is like bonus prize to us. It's part of capital appreciation by God willing. What we will just do now, we can be patient.
The management and the board of the group further reiterate their commitment to the shareholders.
We have listened to our shareholders very clearly, and we know what they are expecting from us, into the coming years. And so that's what we're going to be focused on, and that's what we're going to be executing seamlessly, going into the future.
We are now going into consolidation phase, a time when, based on the astute investments that have been made, over successive management teams, we are now about to reap the dividends of those investments. So this is the time for shareholders to really reap the rewards of their loyalty to Access Bank.
As the bank consolidates for the future, the group set to continue to position strategically by facilitating and enhancing cross-border trade across the globe.
All right, I guess the capital raising season is heating up at this time. But let's head on to our first conversation now. See, yesterday there was weakness in the official window for the Naira against the dollar, an enormous 2% loss at the NAFEM window. There are also reports of the Naira breaching the 2,000 Naira mark. That's against the pound sterling. But we did see strength with the pound sterling earlier today. Well, let's get an outlook for the second half of 2024. That's for the Naira. Joining us now for this conversation is Oladipo Ajayi. He's a head FX and fixed income at Chapel Hill Denham. Joining me via Zoom. Great to have you on the show.
Yeah, thank you very much for having me this afternoon.
Yeah, so it seems the volatility is back with the Naira. Hope it's not back yet, but yeah, we're seeing weakness at this time. What do you think is happening? Should we be worried?
Well, I think in a situation whereby you have a market that is open, you expect to see volatility where when there is when the demand actually outweighs the supply. And that's currently what we are seeing on the market as we speak. And we have not been seeing a huge inflow of effects from foreign investors in the market in the last weeks. And so also the central bank has not been aggressively participating in that window. So we expect in such a time like this for you to see the pressure on the currency. And that's exactly what is currently happening now. And also, when you look at what's happening at the market, currently we don't have a window that's actually catering for invisible demand. There are people preparing for their summer holiday as we speak. You have people preparing for payment of school fees for the new academic year. And these are some of the things that you expect to actually put pressure on the currency. And that's exactly what we are currently seeing in the market.
We know summer is upon us at this time, but do you think that we should just expect weakness, in this period, or maybe the central bank will have enough in their arsenal to actually defend the Naira in this period?
Yeah, I think the central bank will actually have to rise up to the occasion, and that is their duty. Their duty is to actually come to the market when they found that Naira is aggressively being on the price, and they will have to come to the market serving this situation. And this is a very good time for the central bank to actually visit the market. And we pretty well that currently the foreign reserve is currently swelling and is currently north of $35 billion. So it simply means that the central bank has the muscle currently to actually be able to actually solve the situation. So I see the central bank actually coming to the market to actually solve the situation, most especially in the NAFEM window. But my concern is that how would central bank actually cater for people that actually need funds in the invisible segment? Because currently the BDC are currently going through reorganization, and you all recently announced that the CAC is currently looking at actually rescinding the registration of over 4,000 BDC, and I think it's good that what the central bank is doing to actually get to actually institutionalize BDC, but at the same time they must actually find a way to actually create a window that can actually cater for people while they are trying to actually restructure their business. And so I feel that the central bank maybe in the meantime may continue to use the commercial banks as an avenue to actually meet this segment of the market's demand. Because if that is not done, what we will see is that we will continue to see aggressive pressure on the currency in the parallel market, and we think that can, one way or the other, impact what we are seeing in the NAFED window.
All right, and definitely we can see this happening with major currencies in Africa. We're also seeing major economies having to deal with high debt issues at this time. So looking at the currencies in Africa, we've seen the talks about the ECHO, that's the ECHO's currency, being talked about again at this time. So is this what will save most of the currencies in the West African region? Do you think the ECHO is what we need right now, since we're all dealing with currency weakness at this point, most of us?
Well, I don't think totally that is what will salvage the situation. And we have data on the table that we have not fully implemented. So I don't think having a uniform currency will be the savior. As we speak, we've seen that happen in the European zone, where they actually introduced the euro currency. And of course, to a great extent, that's also backed by the performance of the economy of these countries. So it simply means that no matter what whether we actually create a uniform currency around that will also be backed by the activity, the trade, and also the capacity of the countries in question to be able to actually develop the economy by actually becoming more of a producing economy than the consuming economy. So I think is that the problem is the fact that we are not producing as much as we should as countries in Africa, and this is something that we need to look at. How can we actually further improve trade among African countries? How can we go beyond actually selling raw material to actually adding value to this thing, to the raw material to become more like a final produce and before actually exporting to outside nations. So I think it's more like trying to actually find a shortcut to the solution. And for me, I don't think that would be the best way around it.
So uniform currency, we might not see long-term potential with that if we do not produce. That's looking at this West African region. But let's look at the global market now. We're seeing the DXY. There's some weakness there with the dollar index. It's down about 0.18% last time I checked. But is this some kind of bright spot for most of these other currencies that have been struggling, with the dollar being weak against a basket of currencies?
Yeah, as we speak, we know the reason why the dollar is a bit weak as currently, and it's because a lot of people are currently expecting the Fed to become a bit dovish towards the end of the year, and we expect that one way or the other to impact the currency, and that's what other currencies are currently enjoying. But if at the end of the day inflation continues to bite and the Fed decides to actually maintain their stance that they are not going to actually touch the rate this year, we will likely see more like a pullback in that direction. So I don't think it's totally a good day already until when we start seeing what will happen by the end of the year on the back of the Fed.
Right, we'll definitely watch out for that. But what are you seeing? We're in the second half of 2024 now. What are your expectations, for the Naira after maybe the summer season demand, when we've been able to pull through that? Where do you see stability in this second half? Do you see strengthening at all?
Well, for me, I think I expect the Naira to actually strengthen by second half of the year. And that's basically based on the capacity of the central bank to actually defend the currency. So also, currently rates are at elevated level as we speak, and it simply means that there's the opportunity for foreign investors to continue to actually patronize our markets. Basically the portfolio investors. And also, there's every tendency that Nigeria may actually be present in the Eurobond market sometime this quarter. So what it simply means is that you also improve the muscle of the central bank to actually defend the currency in that wise, or to actually meet demand. And so also we have seen the fiscal policy guys also currently back on the table around the stabilization fund, and they also mentioned how they want to improve oil production from current levels of around like 1.5 million barrels to like about 2 million barrels per day. What this will mean is that it will improve the dollar revenue that actually will accrue to the country, and it also means that it will also improve the power of the central bank to actually meet the FX obligations of the country. So when you sum all these things together, it's a pointer to the fact that the second half will actually be better than what we have seen in the first half. It simply currently seems we have noticed that the volatility has dropped significantly, because for a long time we've been around 8,400 and 8,500 for a long time. So it simply means that one way or the other, the volatility has down, and currently, so it simply means that by second half of the year we may not see that aggressive volatility like what we saw in the first half of the year. By so doing, coupled with the fact that we expect the central bank to have finalized all the arrangement with BDC, and also the partnership between the BDC and the IMTOs, we expect to start seeing the dividend of that in the market. So when you sum all this together, what the fiscal policy guys are doing, coupled with what the monetary policy guys are doing as well, I think it's a pointer to the fact that we expect a better Naira in the second half of the year.
Well, definitely. Before I let you go, we know investors are having to deal with high inflation and currency volatility at this time. What do you think is the best hedge in this second half?
Well, as we speak currently, for me, I think there's a lot of opportunity in the market. You have the equity market is actually giving a great return, and if you look at the first quarter, the EFI actually returned over 30%, and that is as at that time greater than the inflation figures. And also we also see opportunity in the fixed income market as well. Effective yield of 1 year paper is currently very close to 30% as we speak, going by the last OMO issue by the Central Bank of Nigeria. So when you look at these, you feel that there's a lot of opportunity in this regard that can actually help pushing the effect of the inflationary pressure.
All right, definitely be watching out for that. Thank you so much. Always great having your perspective. Mr. Oladipo Ajayi is the head FX and fixed income at Chapel Hill Denham. Thank you so much.
You're welcome, sir.
All right, we'll take a break now. When we come back, we're going to head straight to the markets. That's the moment. Just stay with us. All right, before we head to the markets, let's get a story now from the electricity sector in Nigeria. We see the Power Africa program, which is an initiative of the United States government to support Nigeria's effort to reform the power sector with 115 billion naira support. It's given a lot of attention to the regulatory environment in the electricity sector. The program coordinator, Richard Nelson, who was a guest on Business Morning, says the plan to work on boosting supply and distribution from both on and off grid. Take a listen.
The key is really strong regulatory environment that is enforced. If the regulatory environment is enforced and predictable, and people are willing to pay, and by the way, if more people are paying for their power, tariffs can be lower because it spreads it out across more people, right? And so those are critical factors that have to be addressed. And when that happens, you're going to have investors who are waiting in the sidelines right now, looking at Nigeria, very interested in investing in Nigeria, but are nervous about the power sector. And when they see that more consistent, they see reliable power, they're going to be investing in much larger amounts. And so that's part of the issue here, is to help establish those frameworks that can really be respected by everyone and enforceable. And so that's where we're going to be working. And again, it's a responsibility on the private sector, on consumers, but also on the government to ensure that all those policies are clear, they're set forth in a way that people understand them, and that really forms the basis for the system.
All right, definitely let's get a sense of how the markets are looking at intraday. Major markets we track our local bourse, and global markets, definitely we've seen the weakness in the local bourse for the second half of 2024. But let's get more now. John McQuarrie is on this side again. This week.
I don't know what yourself and Anita are doing, putting me on this.
Anita is on the field right now, getting all of those markets, right here, because it's capital raising season.
Yes, it
all
is.
All the banks are out there trying to get funds.
Access Bank. We did GTCO. Fidelity started it,
right.
But it seems there's respect in the banking area, because it's like the first tier banks are leading, and then later the second tier banks. I don't think there's a schedule.
I'm sure there must be some kind of schedule.
That's intentional about that arrangement. I just wonder.
We'll definitely keep watching, but we know the FUGA is a hidden market first. Then we'll see what the tier 2 banks. Well, we'll see one though. Fidelity, come hit the market. So
yes, but they are also experiencing profit taking in spite of this. So one would have thought perhaps it would be a continuous surge until the end, but it's not really like that.
Right.
So it's normal market cycle when there's bargain hunting and all of that. The investors are waiting on the sidelines. So I don't have to wait until the end of that issue exercise. I can take profit now, and that's really going on.
So it seems Professor Uche Waleke's projection is come to pass at this point. He is saying there will be a correction for the second half of 2024, but we'll definitely see.
But we're so happy. We're so happy. Final quarter of 2023, the NGX surge. The first quarter, we still did well, and now the second half reality is.
We'll see.
We'll certainly see. All right. So good afternoon, everyone. It's the Market Corner, and I'm here, different from what I was doing in the morning, but yesterday was really busy just for the treasury bills, because the bonds market yesterday in Nigeria was kind of quiet, but the treasury bills was active because there was an auction there. We'll get to that in just a bit, but let's look at the NGX, where I believe it was very busy yesterday. You saw the Minister of Environment was there for the closing of bonds, so we're soon going to be having green bonds, apart from the normal auctions that we do have, or normal securities. But for this afternoon intraday, it's up 0.02%, a departure from what we closed with yesterday, but we haven't regained 100,000 there. That's still sad. South Africa GSE is also in the green, looking really good, 0.74% at intraday. If we see Egypt and the other market. If not, let's just head over to Nigeria's fixed income market and talk about that auction of yesterday. It was a treasury bill fund, and we saw that the rates were, I don't know if we're expecting it to be more than this, because for the treasury bill, we had 22.26 for the April 2025 bond, and for OMO, we had up to 22.35. I don't know if the rates were expected to be higher than that. But we have Nabila now to help us understand some of those backstories. Hi, Nabila. Good afternoon from Chapel Hill, Denham. Good afternoon, Nabila.
Good afternoon. Thank you for having me.
Great. So tell us about how this auction, I thought there was that expectation that yields will keep growing, but I think the highest yesterday for the treasury bills was about 22%. But give us a bigger picture of what happened at the markets concerning the auctions yesterday.
So as you know, with every auction, there is always the function of liquidity that's available by the banks or the other financial institutions that are taking part in the auction. And what we noticed was that in yesterday's auction, there was still a dearth of liquidity in the system. And as a result, for the first time in the past 3 auctions, we saw that the 364-day maturity stock rate increased from 20.68% in the last auction that was held on 26th of June to 21.24% And this is largely as a result of the liquidity squeeze in the system that we have been seeing in the last at least couple of weeks. But we did still see strong demand. And when we even spoke to some of our traders on ground, they did mention that the participation across banks was not as much as they used to see in the previous auction. So what we noticed was that there were fewer participants in the auction, but then there was still strong demand, and they were able to at least exit the market with above what they set out to offer, which was around over 166 billion.
All right, but as per the yields, the rates, should we say Christmas is over? Federal government is beginning to tighten up now, especially because the conversation of debt servicing is also coming up.
Yes, definitely. We did expect that the rates would be a little more stable. And what we noticed, like I mentioned, was because the liquidity squeeze was there, and there were little.
You're not waiting for me. Are you waiting for more guests?
Yeah. Can you hear me?
Yes, I can hear you, Nabila. Go ahead.
Okay, so as a result of that liquidity squeeze, we did see only the 364-day stop rate go up. But we still see that the government would like to keep rates at stable levels in order to, reduce the impact that it would have on debt service obligations, given the, how tight revenue is.
All right, Nabila Mohammed, thank you so much for your time this afternoon. Equity trader with Chapel Hill Denham.
Thank you.
All right, if we could have a bit of those numbers from other countries just before Ladi will take over. Middle East markets, we see intraday that Abu Dhabi is in the green, 0.20%. Dubai is also in the same area there at 9,000 and 4,000. Look at the other markets right there. If we could have the other markets, I'll be glad. All right, Ladi, seems we can have the other markets. So,
yeah, so we'll see
I'm
where
sure you have.
At this point.
I think Juliana is standing by.
Yeah,
for
definitely.
You.
Yeah, we're going to go to Juliana in a bit. But thank you so much for the update there from markets we track right here and in the global space. And talking about Juliana, she's not in our London studio today. She's actually in Munich. Hello, Juliana. Great to have you.
Hi, Laddie.
Yeah, I know you're in the move.
I was waiting to hear Innie's market numbers. Actually,
I know, right?
I'm so used to hearing the market numbers, all of them, just before we get to London market. So please do apologise to Innie on my behalf. But you're right, I am on the move. As you can hear, there was a lot of noise in the background, and of course, when I'm back in the London studio, I'll be updating our viewers about my experience with Canon, who are on the verge of making filmmaking more affordable for young African filmmakers, which is really important in Nigeria, the entertainment sector.
And I thought you were in Germany because England might be bringing it home, at this time. But I guess
I know. Yeah, that's been very exciting. However, of course, the border country of Germany is the Netherlands, so there were a lot of tears in the hotel yesterday evening, although it wouldn't have been as uncomfortable for me as it was for Prime Minister Sir Keir Starmer, who, of course, was watching the England match with the Dutch Prime Minister Mark Rutte. So that would have been more excruciating for him, but obviously very great victory.
Yeah, great for England. Well, we have data out there in the UK. We see the Office for National Statistics data. So the UK economy is grown by 0.4%. That was in May. I guess that's bullish news.
Yeah, that's really amazing news. We say a week is a long time in politics, and clearly, when it comes to Britain, that story couldn't be more true. Sir Keir Starmer, again, he hasn't been in power for a week yet, and already he has been schmoozing with world leaders in Washington. And of course, we've got these GDP figures that have shown that Britain, quite surprisingly, grew 0.4% in the month of May, led by the construction sector. That grew 1.9%. I believe there were 5 successive months of slowed growth. So the fact that that sector has grown at a time where we heard from the Chancellor of the Exchequer, Rachel Reeves, on Monday, saying that Labour are committing to building, I believe, 1.5 million homes before the end of Parliament. That's 330,000 homes a year. That's a major boost to that sector. So even though the Labour Party cannot take credit for these GDP figures, I think it's just the overall optimism of change in the UK. And the ONS, the Office for National Statistics, did also upgrade April's GDP figures. And of course, we've got to wait a month or so to see what June is going to look like. But it's very good data.
Yeah, quite bullish data there. But I see the water industry businesses, they want to increase tariffs, water bills at this point. And we're seeing an average rise of about 21% over the next 5 years. That's according to the regulator. How's this been taken over there?
Yeah, this is a huge story, and it's likely going to be a major headache for the new Labour government in the months to come. We know that the water industry, especially since it became privatised in the late 80s, has suffered from a significant amount of high bills. Of course, environmental laws have changed. There's been lots of issues with leakages and sewage. And Ofwat, the water regulator, have just released insight into some consultations it had with the major water firms led by Thames Water, and they have proposed that over the next 5 years, water bills will increase by, I believe, a maximum of 43%. So the Chancellor has just, labelled that absolutely ridiculous. And I believe there will be debate in Parliament over the next couple of weeks to try and find a resolution to this issue. Thames Water have been in trouble for a long time now. So we'll just wait to see what Steve Reed, the new Environment Secretary, has in terms of trying to organise this chaos that the sector has found itself in.
Right, I guess this new government have the work cut out for them this time. But thank you so much, Juliana, for giving us your time there. Juliana's in transit right there in Munich. Thank you so much, Juliana. Let's take it on to Europe now. We see Germany's biggest car maker, Volkswagen, is likely to close a car plant for the first time in Europe as electric vehicle sales continue to disappoint. Well, join us with more is DW correspondent Chimbona Chimbelu. Great to have you, Chip. So can you bring us up to speed on Volkswagen?
Thanks for having me. Well, Laddie, for those who have been following the news on electric vehicle sales, this news is not unexpected. The situation has been brewing for a while at VW subsidiary Aldi in Belgium. High costs and poor capacity utilization haven't helped the car maker, especially given the disappointing sales for electric vehicles. And the luxury Aldi model, the Q8 e-tron EV that has been produced in Belgium since 2022, hasn't been selling as well as was hoped. As a result, Volkswagen has cut its profit forecast this year because it expects additional costs of 2.6 billion euros to weigh on its results. And now it is mulling closing the factory to save costs. The plant has been producing vehicles for more than 7 decades, so this would be a historic move here in Europe, where VW has never closed a plant. Around 3,000 people work at the Belgian facility, and Volkswagen is reportedly in talks with local authorities to discuss the potential closure.
I guess the EV battle there continues, but how's the German auto industry doing?
The older German players, so VW and Mercedes, have been struggling to sell their electric vehicles. And here in Germany, a hole in the national budget led to the end of a subsidy that incentivized drivers to buy EVs, and that has also hurt sales. But the bigger challenge has been competition from newer players that include Chinese EV maker BYD. It's not just that they can produce vehicles cheaper, it's also that they potentially benefit from Chinese state subsidies. And that is something that the EU is trying to change. This month, provisional duties on Chinese-made EVs took effect, and a conclusive decision on tariffs is expected by October. However, Brussels' move to protect European car makers hasn't been welcomed by the German auto industry. It is against the tariffs on Chinese EVs, and that is something, of course, that even the government in Berlin agrees with because of Germany-China trade ties. China is a major market for VW, Mercedes, and BMW. So it will be interesting to see how Germany's car makers navigate the transition to EVs and rising protectionism.
All right, we'll keep tracking that industry, but the week is winding down now. What can we expect from the markets today?
Laddie, European stocks are expected to trade higher today. Now, that comes after U.S. Fed Chair Jerome Powell said that he has some confidence that inflation is receding. And while he remains cautious, his latest statement has lifted hopes of an interest rate cut later this year. So investors will be keeping an eye on U.S. inflation data later today as well. Expectations are that we will see the smallest increase in consumer prices since last summer. And there's not much happening here in Europe in terms of economic data. The main news here is that German inflation was down 2.2% in June compared to May. And that's because, and that's, of course, despite the fact that Germany is hosting the Euro 2024 football championship. So, of course, that is good news for the German economy.
Yeah, quite interesting. Hosting the Euro 2024 and inflation staying quite stable. Thank you so much, Chiponda Chimbelu, for the details right there in Europe. All right, let's get a check on other stories now. Starting with North Africa, we see Egypt. There's lowered its wheat supply. That's its wheat self-sufficiency target for the current fiscal year, despite plans to increase its agricultural land area. And that's in line with plans to diversify agricultural exports. The self-sufficiency target of 51% for one of the world's largest wheat importers for the fiscal year ending June 2025 is slightly higher than the previous year, but lower than the previously announced target of 65% for 2025. The Egyptian government buys wheat internationally and locally to offer tens of millions of Egyptian subsidized bread. And local wheat production currently meets about 49% of demand, up from 45% in 2020. Uganda's central bank has begun buying locally produced gold to bolster its foreign reserves. The move is expected to lower the country's gold exports, with shipments that normally bring in about $2.3 billion. It brought that in last year. All right, now to the commodities market. We know Stockfish. Now we're going to be looking at Stockfish, a major ingredient in various Nigerian dishes right now, but definitely with the inflation rate still high, food inflation really high, we're still seeing rising prices even with Stockfish at this time. Join us to unpack this is Emefiene Onyelukachukwu. She's an analyst with FDC. Great to have you on the show. All right, so we see the price of a small-sized whole stockfish. That's jumped by 300% from 2,500 Naira to 10K year on year. What's the main driver of this price increase? Is it just the normal food inflation rise?
Stockfish is a major commodity that is usually consumed. Stockfish is a major commodity that is usually consumed in Nigeria. This is because of it has its distinct taste and also the flavor that it gives to food. Right now, we're seeing that the price of stockfish has increased. This is as a result of, one, the exchange rate depreciation. The price of stockfish is directly related to the exchange rate. And currently, we're seeing that there's a depreciation in the exchange rate, which is also contributing to the local price of stockfish. Another reason that is causing this stockfish price to increase is also climate change in the major producing country, which is Norway. There's usually a particular type of fish that's called the codfish that usually migrates towards the North Atlantic region in Norway. And this is because of how cool temperature is. But right now we're having climate change and we're seeing that temperature levels in the sea are beginning to increase. And this is causing this codfish, to move to other places. And so when these fish farmers go to these places. They don't find this fish, so they have to go to all these different locations. And with even going to these different locations, it's going to cost more fuel, which is an additional operational cost. And also, they have to adapt to this method. And when they have to adapt to this method, the quantity they get is not as much as what they usually get, which is also reducing supply and also increasing the price of stockfish.
Yeah, so we're seeing definitely supply issues at this point. But what about the stability we've enjoyed, with exchange rates so far? Even though we're seeing weakness yesterday, I know stockfish is imported. It's the price, is it closely related to exchange rates?
Like all imported commodities, stockfish is directly related to exchange rate. And also the factors that affect stockfish include the exchange rate, freight cost, and also the import duty. And right now, we saw a stabilization in the exchange rate, which could reduce the price of stockfish. However, we're seeing that it depreciated yesterday. So this continuous depreciation would definitely increase the price of this will increase the local price of this commodity.
All right, definitely keep tracking that price. But, everyone is looking at substitutes at this point. I'm wondering if there are any interesting substitutes for stockfish.
Well, I won't say there's really any close substitute, but people can also use things like commodities like dried fish. They can also use mangala fish as a substitute for stockfish.
All right, let's hope those substitutes don't increase in price at this point. Thank you so much, Mefin, analyst with Financial Derivatives Company. Thank you so much.
Thank you.
All right, now let's get a check of what's happening with the crypto market now. Definitely we're seeing weakness right there, even though we're seeing the dollar index actually down about 0.18% last time I checked, but we're seeing the Bitcoin, $58,261, trying to make a run back to that 60K level that was lost. But we're seeing Ethereum, just like yesterday, doing exactly opposite of what Bitcoin's doing. And we're seeing $3,142. That's what we have for Ethereum. A big 1.65% jump there for Ethereum. So this is the king of the altcoins at this time. We know Bitcoin is the king of the whole market, but the king of the altcoins is moving quite well, and we see a couple of altcoins actually following with that. Let's look at the top cryptocurrencies that we track. We see, top cryptocurrency. All right, there we have it. Bitcoin, 0.49% down. And we see the likes of Binance. That's the coin for the exchange, the currency exchange. Binance, $530, 1.42% up. And we're seeing big moves there by Cardano. ADA, 39 cents, up 2.30%. And the likes of XRP, 44 cents, up 1.18%. So we're seeing strength with most of the altcoins at this time. And I'm sure investors in the crypto space would like to know when alt season, when are the altcoins going to rally? Let's look at some news now. In the market, we see the German government have unloaded about 1,125 Bitcoins to crypto exchanges at this point, as the German government intensifies its sell-off of Bitcoin at this time, disposing an additional 1,125 Bitcoins, but is going through prominent exchanges like Coinbase, Kraken, Bitstamp. This move comes amidst a series of strategic sales aimed at liquidating part of its substantial Bitcoin holdings. So apparently the German government holds a lot of Bitcoin, and we see them offloading that at this time. Then President Trump is to speak at a Bitcoin conference. We see the Bitcoin conference organizers have announced that former U.S. President Donald Trump will be one of the speakers at the event. That's taking place July 25th to 27th in Nashville, Tennessee. The event is noted as one of the largest gatherings of Bitcoin enthusiasts and industry leaders worldwide. So this announcement has led to a significant excitement within the crypto community. Then we see Kiyosaki predicting Bitcoin will reach $350,000. So yeah, those massive projections for Bitcoin are back again, and the latest from Kiyosaki at this time. All right, let's discuss some of these headlines now. We have Sheol Dania as the CEO, Alpha Geek Technologies, joining me via Zoom. Great to have you on the show.
Hi, good afternoon, Ladi. It's a pleasure to be here.
Yeah, so we've seen a lot of news from the German government offloading Bitcoin with their massive holdings at this time. Is this just profit taking?
It's two things. It signals that there's a possibility that the German government might be coming up with some regulation, either for or against custody of Bitcoin, and evidently they will need to sell off what they have, or move it off their own custody, depending on what they are working on. And it could also be profit taking. But I don't think this is the best time to take profits if I were them or I were part of their advisors. But I pretty much believe that it's also good for the community because it signals the strength that, a country like Germany is holding cryptocurrency and they're moving it to exchanges. So however they decide to sell off or trade would actually set some precedents, so how people will be able to transact Bitcoins following how a government like Germany has actually, done theirs.
We see, the likes of China, accumulating gold and most other central banks in the world now. So we're also seeing some countries holding Bitcoin at this time. But do you see central bankers actually accumulating Bitcoin at some point? Or maybe that's already happening?
For some of those countries that are accumulating Bitcoin, if you look at China, look at countries like El Salvador. El Salvador was, they were in some kind of, financial crisis. They needed to, diversify their portfolio. But if you look at China and, maybe other countries, it may be a power play. So what it is everybody wants to be involved. They know the influence that the cryptocurrencies are having all over the world, and they have funds that are available. So why not accumulate Bitcoin? So in the event where that becomes the store of value as the whole world predicts it to be, or some of the world predicts it to be, they will not be found wanting, and they would also have a significant amount, and they can control the world economy.
Right.
By holding a lot of power.
Definitely, we know half the world are heading to the polls, and some countries have already decided at this time. And now we're seeing Donald Trump, former president, he's going to be speaking at a Bitcoin conference that's holding in July. And I'm wondering, it seems politics and Bitcoin are getting quite close at this time.
Oh, always. Even if you look at the Nigerian elections that happened, last year, we saw, during the campaign, they all reached out to the crypto community in Nigeria. Everybody promised an arm and a leg. But back to Donald Trump, we can see that there's definitely a growing influence and there's voting power. So there are people who are in the crypto community from all walks of life, different demographics, and everybody is pro-bit. The people who are pro-cryptocurrency have something in common. Everybody's looking for financial freedom. So, of course, where else are you better to go to see a large gathering of different people from different walks of life, different demographics? And we know that technology is also part of the things that is in the future. We are in the technology era, so most of the things that are being built around, are also being built around blockchain technology. And most tech-savvy people are pro-cryptocurrency to some extent. So the politicians definitely want to leverage on the savviness of the people to see, they get the younger people who are tech savvy and want to be involved. And of course, there's always the financial support. It has always been the fact that, it's not news that the people within the cryptocurrency industry they're somewhat generous, in terms of, political contributions, and there's always willingness for them to contribute towards different causes. So I believe that Trump's advisors, have weighed all the different angles. They're able to see, they'll definitely be able to raise money from that community. They're able to gather enough votes and support from people within that space. And if they truly want to, implement things that are going to be pro-crypto, that is the only place where they're able to gather all the policy expertise that is required, for them to. They work with the enthusiasts, work with people in the financial market to see how they can draft policies that will favor the United States and, their people.
And let's imagine or assume that Donald Trump actually wins at this time. Do you think he'll still be bullish, about Bitcoin going forward?
If he's a politician, I can't speak for him. But the truth is, if he gets support if he goes bullish, and promises support for the industry, and he's able to get support from the crypto community. Evidently, of course, that's a bullish signal for cryptocurrency in itself, if he comes into office, because everybody will be expecting that he's going to do a lot for the community in the United States towards regulation and officially legalizing and recognizing this asset class.
Yeah, quite interesting, definitely. But you know how the price projections for Bitcoin always spring up. We see incredible price predictions. Some say $1 million at some point. Some say $300,000. But nobody's predicting downside prices, at this point. But how are you seeing Robert Kiyosaki's latest forecast of about $350,000 Bitcoin?
Yeah, so Robert has had the track record of always predicting. His predictions have been pretty mixed. We still know that earlier on in the year he predicted $100,000 by June. But I believe that Bitcoin was on the way to over $100,000 if the fundamentals were right. The bull market is still yet to kick off officially, but after post-halving, everybody expected definitely more than that. And by $350,000 by August is very possible because there are a lot of things happening that people can see. Robert has been it's been mixed. Nobody hits it right, but he's very optimistic about Bitcoin and has been talking about it for quite some time. So I believe it's the time where fingers are crossed, everybody on anybody who can. It's not financial advice, but if you can and have money that you can't, that you're not doing anything with, you can always buy whatever fraction of Bitcoin, and then we see how it goes.
Yeah, definitely a wait and see moment. But we know incomes are quite squeezed at this time. So definitely, I'm sure the retail side of things are feeling the heat right now. But, going into the weekend, what are you seeing for Bitcoin and this whole tap season? Everyone's tapping their phones, at this time, trying to get some airdrops.
Yeah, so fundamental thing about the tap thing is people have always been gamers. People like games. So if you see games like Candy Crush and those other games where people actually spend money on playing these games, now in the cryptocurrency industry, they've now brought in those similar kind of games where people actually are able to earn money from playing those, from tapping. So people hope that they're able to. I think Hamster, one of the popular games, Hamster, it launched on some of the popular exchanges a couple of days ago. I didn't even follow up on how it predicted, but yeah, people want to make money. There's economic crisis and there's cash crunch everywhere in the world. It's not just a Nigeria thing. So a lot of people are looking for any avenue that they can make extra money without having to risk capital. So for people who have the time to tap away, they believe that they can trade that time for some airdrop as of free tokens.
Definitely, if you have the time, because that thing is definitely time consuming. Thank you so much. Thank you so much, Shehu Dani, as the CEO of Alpha Geek Technologies. Thank you.
Thank you very much for having me, Ladi. Have a great day.
You too. All righty then, that's the show today. You can visit channelstv.com for more updates. I'm Ladi Williams from Mini Team right here at Channels HQ. It's bye for now.